Hello, everyone. Welcome to Consumer Action's Digital Payment Apps, Know Your Rights and Protect Your Wallet webinar. My name is Nelson Santiago, and I'm a Community Outreach Manager with Consumer Action. I am thrilled that all of you are here, including some of the new folks that we've been meeting recently at our in-person events. Thank you for being on today. Let me tell you what we're going to do today. Today, we also will have Linda Williams, who is in the background now, ready to get all the questions that you may have for our speakers that we will hear from today. Maybe one of the questions you will ask is, are the slides going to be available? Is this being recorded? Yes, it is. So you will get that information in about a week. We're also going to ask you to answer a survey right at the end of this the presentation. So definitely stay on for that as well. Before moving on, I do want to acknowledge our funder for this program. This is possible. We're able to present this webinar thanks to funding from Block. And Block is the company behind Square and Cash App. And we are glad that they are committed to education. Today is all about education. As you can see, there's a lot to learn about mobile payments and digital wallets. For those of you who may be a little bit new to Consumer Action, just want to mention that we are a national nonprofit. We are going to be celebrating our 54th anniversary a little bit later this year. You'll all be invited to a virtual event related to that. And if you're in the DC area, we also will invite you to join us for a reception. One of the things that you will find on our website now, this is fresh from our editorial department. They put together a little fact sheet called Peer-to-Peer Payment Apps, What to Know Before Sending Money. And this fact sheet covers a few of the basics of payment apps, how they work, how you link them to an account or to a credit card, and what the difference is as you make those choices. What may be different in terms of consumer rights. Those are spelled out in the fact sheet. Also, some of the protections you have if there are errors or fraud exists, and then some tips for protecting your money and personal data. As we will hear today, there are a lot of benefits and a lot of risks, but everyone is using these, so we can't go anywhere without seeing someone pull out their phone and make a payment. But as this use of apps is exploding, we also think it's a good time to review, refresh, find out what is the latest information on staying safe with these apps. Another thing that we do that's different from a lot of organizations is we really work hard to make materials available in multiple languages so you can reach different audiences. So these are, these are translated by humans to be good translations of the material. And this particular fact sheet will be in English, Spanish, Chinese, Korean, and Vietnamese. The English is already up at the link that you see on the site, and the other languages will be up soon. So just keep checking the site, or you may get an email from us when those are ready. But moving right along then to today's program, like I said, there's so much for us to learn and cover today. We have three distinguished speakers joining us, including, first we're going to hear from John Braille. He's at the National Consumers League, where he serves as the Vice President of Public Policy, Telecommunications, and Fraud. And as the director of the fraud.org campaign, John is a nationally recognized expert in fraud with more than 17 years of experience in educating consumers and advocating for strong consumer protections at the federal, state, and local levels. John also regularly advises technology and financial services industry leaders in how to better protect their customers from frauds and scams. He is the author of fraud.org's monthly fraud alert emails and NCL's biweekly data insecurity digest. Among other things, John is going to talk to us about how the use of digital wallets has expanded quite a bit in recent years, and he's going to offer us a close look at the payment app benefits and risks in a couple of minutes. And John, as always, he's based in DC, where we have also staff, and It's always great to see him at our DC events. So thank you for being on, John. And let me tell you about our second speaker. That will be Stephanie Landry. She is the strategic lead for digital finance at Consumer Reports. She helps she helps develop and implement strategies to strengthen consumer protections in the fast-growing marketplace of digital finance products and services. Stephanie oversees the development of a digital finance evaluation capacity at Consumer Reports, including integrating digital financial research with Consumer Reports advocacy for fair, safe, and a just marketplace. Stephanie comes to Consumer Reports with a background in financial inclusion and economic justice. Before she joined Consumer Reports, Stephanie provided training and technical assistance to community-based organizations to build capacity to meet the financial needs of the clients. And Stephanie, we have a lot of community-based organizations here, so you will be reaching a lot of the audience that you are used to working with. Among other things, Stephanie will be helping us to understand why it's important to learn about the safety, privacy, and security of payment apps and digital wallets. And then lastly, we're going to hear from Vikram. Vikram Jagadish is a trial attorney at the Federal Trade Commission working in the Northeast Regional Office. He investigates and litigates a wide variety of fraud cases involving vulnerable victims, including the elderly. At the FTC, Vikram served on a pandemic fraud task force and currently routinely gives presentations to the public on avoiding fraud relating to investments and emerging technologies. Before he joined the FTC, he worked for several years at the Justice Department as a trial lawyer, focusing on complex international criminal investigations. We're so glad you're here, Vikram. Vikram will be giving us a close look at what we need to know about payment app scams, what consumers can do if they send money to a scammer, and resources for keeping up with the latest scams. And we know that Vikram does a lot of workshops because we had an event in New York City and Vikram was our guest speaker there and did a wonderful job. So we're glad you are back. Now, so we're going to move right along, and I'm going to invite John to unmute yourself, John, and we can move into your presentation. And then again, as you hear these presentations and you come up with questions, please type them into the question function for Linda to present to us later. Are you there, John?
I am here. Can you hear me?
Yes, we can.
Perfect. Well, thank you, Nelson, for that introduction, and thank you to Consumer Action for inviting me to present today, and to my colleagues from Consumer Reports and the FTC for being here with me, and of course to your sponsor Block for helping make the investments that make events like this happen. You can go to the next slide. So again, my name is John Brayo, and I'm here to talk to you and introduce you to this issue of digital payment apps and what your rights are when it comes to those and how you can reduce your risk of fraud. So we go to the next slide, please. So who is the National Consumers League? If you haven't heard of us, that's okay. But we've been around since 1899. My boss hates it when I say that because she hates it when I say that we're the nation's oldest consumer advocacy organization. Although we are, she would prefer that I call us the pioneering consumer organization. Our mission is to advocate for social and economic justice for consumers and workers in the United States and abroad. We advocate on a wide range of issues. So in addition to working for stronger consumer protections in financial services and protections from fraud, like I'll be talking about today, we also work on things like healthcare, safe food and drugs, auto safety, product safety, travel. We really do try and cover all the bases when it comes to helping consumers in the marketplace. Next slide, please. So we're here to talk today about payment apps. And what I wanted to start to talk about is sort of level set for you. Many of us may be familiar with payment apps like Venmo, like Cash App, like Zelle. Other people, when they think of payment apps, may be thinking of things that are considered digital wallets, things like Apple Pay or Apple Wallet or Google Pay, things like that. They all kind of fall into a broad category of payment apps. But a lot of what I'll be talking about today is specifically relevant to these standalone apps like Zelle, Venmo, Cash App, and PayPal. Um, while I'll be talking a lot about the risks and what happens when things go wrong, I think it is important to start off by talking about what makes these apps so popular with consumers, and indeed they are, and they have become ever more popular over the last decade or so. First off, they are, as the name implies, they're app-based. Anybody with a smartphone or a web browser can use these payment apps. If you have a bank account or a credit card to link to them, you can use these apps to move money in ways that many of us have gotten used to using over the years with things like checks, cash, credit and debit cards. A second benefit is that payments are typically instantaneous. So if you're like me, when I got my when I was got my first bank account and I got a checkbook, if I wanted to send money to somebody, I had to write out that check on paper with a pen and physically give or mail that check to the person I wanted to send money to. That took time to go through the mail if I was mailing it, and it could take days or even longer once the person got that check deposited in their bank for that check to clear. In contrast, when you pay with payment apps, payments are typically processed within seconds or minutes. There's no waiting on those checks to clear. There's no need to go to an ATM and pull out cash and then take the cash to the person you want to pay. It's all done through the app nearly instantaneously. Another benefit is they tend to be low cost. If any of us have ever had to go and cash a check, depending on where you cash it, there may be a fee involved in that. When you use a credit card, there may be an annual fee that you have to pay on that. For debit cards as well, there can be fees involved. On payment apps, typically there are low or no fees involved. So if I'm sending money or Venmoing somebody money, there's typically no cost to do that. So it's a lower cost there. There can be security benefits versus things like carrying cash or credit cards, all of which can be stolen if you lose your purse or your wallet. We know that checks that people are writing in the mail are getting stolen out of the mail nowadays. By contrast, payment apps can add a layer of security that those other payment methods don't offer. Things like fingerprints or facial recognition can give you authentication when you're using those. And this can be used to prevent the kind of unauthorized use that none of us want to happen. And finally, another benefit would be that many of these apps can integrate with personal finance tools. So if you're looking for ways to make your personal financial management or budgeting easier, when you pay with these apps, they can automatically connect to those types of tools. So these are all some benefits, but let's talk a little bit about the risks of these apps. So if we can go on to the next slide. So there are risks associated with this. Number one, in order to access them, you're going to need to have a smartphone and an internet connection, or at the very least, a web browser on a computer and an internet connection. And we know that millions of Americans lack one or both of those things right now. So if you're one of those unfortunate people who don't have a smartphone or a reliable internet connection, you may not be able to take advantage of these. They are device-based, so millions of Americans lose their phones, and losing your phone can mean you lose access to payments if you're depending on these apps to make those payments and send money to do things like pay bills or support family or friends or things like that. I talked about earlier in the last slide a benefit being instantaneous payments, which is good, but the flip side of that is that payments are also typically irreversible. So once the payment is gone, that means even if you put in the wrong cell phone number or email address or username when you're sending that money, or you were convinced to send money to a scammer as part of a fraudulent scheme, it's really difficult to get that money back once it's sent. So irreversible transactions is definitely one of the biggest risks I would highlight on this list. Insurance is another risk. So we know that money that you store in a typical checking account that you may have for paying bills, things like that. But those funds are typically insured. So if the bank behind them goes under, you don't lose your money, and they're insured under by the FDIC or the National Credit Union Association. By contrast, funds stored directly on payment apps may not be protected by that kind of insurance. So if a company that's really goes out of business, you could lose your money. I think my colleague from Consumer Reports talked a little bit more about this, but I would highlight that it's very unclear what these payment app companies are doing with the data that's shared. You're sharing a lot of private data when you use these about your device, about your location, about sort of who you're paying, how much money is in your account. That's all very valuable data that can and is shared widely by app providers. So there's privacy concerns there as well. And finally, fraud protection. So I talked earlier about a scenario where a scammer convinces you to send money to them or to someone or an account they control as part of a fraudulent scheme. Unfortunately, if they do convince you to do that, you don't have the same protections that you would if somebody got a hold of your credit or debit card. So under federal law called the Electronic Funds Transfer Act, if a scammer gets a hold of my credit or debit card, uses it to run up a bunch of charges, I get made whole because there's limited or zero liability protections built into the law and most banks' policies. By contrast, when you're using, if somebody convinces me to Venmo them money because they think I'm afraid that if I don't send them money, then immigration is going to come and arrest me, and I find out later that it's a fraud, I can't dispute that transaction and get my money back. So that's another one I would highlight as a significant risk of using these payment apps. Can we move on to the next slide? So talk a little bit about this hypothetical peer-to-peer scam. But most of these, the scams that we encounter at my organization, which is fraud.org, that involve payment apps, and P2P stands for peer-to-peer or peer-to-peer payment apps. They usually follow a pretty similar MO. So step one is the victim will receive a solicitation, either via email, text message, over Facebook Messenger or some other social media platform, through phone calls. And that contact will have some reason for the consumer to get in touch with the scammer, either clicking through to a link because they make you think you've got a problem with your computer that needs technical support. They may be impersonating law enforcement and claiming that something bad will happen if you don't get in touch with them. Or something, you might miss out on something good, like a prize, if you don't click on the link and talk to them, which leads to step two. Once you have made that initial contact with the scammer by clicking the link or responding to the email or talking to them on the phone, the scammers typically build trust or fear with the victim. This is to get you into a state that in the industry, in the area of fighting fraud, we talk about getting people under the ether. So ether being sort of like what they put you under when you go to the dentist and get a tooth taken out. Scammers talk about it the same way, putting people under the ether. So they're not thinking sort of rationally, instead they're thinking emotionally. And so they build that trust or fear. And once that's established, which can take minutes, hours, or in some cases, even weeks or months to do, they'll move on to step three. And that's when the scammer convinces you to access a payment app and send money to an account that the scammer controls. It could be, and all of the payment apps have problems with this to varying degrees. And they'll say, I need the money. You need you to send money because, to pay for fees so that you can get the puppy that you think you're buying off the Facebook Marketplace. Send it to me through Venmo. Or, if you don't send me over Zelle money, then the IRS is going to come get you because there's some problem with your taxes. There's some reason they need you to send money. And they convince you to access the payment app and send the funds to an account that the scammer controls. And then step four, once you've sent the money, typically what we see is that the scammers continue to make demands for payment until the victim either runs out of money or discovers that it's a fraud and stops paying the scammer. Unfortunately, what we find is that that step 4 can last for weeks, months. We have many, many horror stories that we hear about at fraud.org where people lose life savings, unfortunately. And the reality is that we often have to have hard conversations with victims and tell them they're not getting that money back. It's gone, which can be heartbreaking, both financially and emotionally. So let's move on to the next slide. So what can we do about this? The big problem here is that these apps have been rapidly adopted in the marketplace. And security to make sure that these payment apps are as safe as possible for their users hasn't kept up with that rapid adoption. And so what we see are skyrocketing fraud rates on these apps. And unfortunately, it's consumers who are bearing the brunt of the fraud losses. The heartbreaking stories of people losing life savings is just one example of that. But there are solutions to that. And that's what I spent a lot of my time at NCL working on. First off, we think that there needs to be a fix to the EFTA loophole. And what EFTA stands for is the Electronic Funds Transfer Act. It's a bill that was passed in the 1970s, I believe, that was designed to make electronic funds, use of debit and credit cards, things like that, possible. Unfortunately, what that bill has in it is a loophole that says you're only protected, or you only have limited liability from unauthorized uses of the card. So the scenario is somebody gets a hold of the credit card, uses it to run up big charges at Best Buy. I, the cardholder, am not liable for those transactions. As long as I dispute it, I can get my money back. By contrast, if the scammer convinces me, even if it's through fraud, to send the money willingly, then that is not considered an unauthorized transaction. I authorized the transaction, and consequently, I am not able to avail myself of the liability protections in EFTA. That's the loophole. And there have been numerous efforts in recent years to try and address this. One in particular I wanted to highlight is a bill called the Protecting Consumers from Payment Scams Act that NCL and many other consumer organizations have supported. It's a bill that was originally put forward by Congresswoman Maxine Waters in the House. Senator Warren has sponsored it in the Senate. And so I definitely wanted to highlight that as an opportunity if folks are interested in getting involved in supporting a really good bill that would help to address this problem. But there are other solutions as well. The scenario I described earlier in sort of that step 1 through 4 is what we call the fraud chain. So when, let's say, I get a text message that says, your Amazon package didn't arrive. Well, that text message had to come through a telecom provider like AT&T, Verizon, or T-Mobile. So they have one piece of the puzzle in terms of information that ultimately leads to fraud. Then that same text message is impersonating Amazon. So chances are if I click on it and don't understand what's going on, I'm going to call Amazon. You know, Amazon is implicated. That's another link in the fraud chain. And then third, they get me to send money. Well, that money has to go through an app, a payment app, and ultimately a bank. Those are yet more links in the fraud chain. And the telecom carrier, Amazon, the bank, the payment app provider may not, and often don't, share all those different signals that something fraudulent is going on. And so we're working with groups like the Aspen Institute here in Washington on a national task force on fraud and scams, which has a whole range of policies we're pursuing. But in particular, we're focusing on incentivizing information sharing amongst all the different actors in that fraud chain, including law enforcement, so that hopefully we put all the signals together so we can do a better job of stopping this fraud before people become victims. Then finally, I don't think it would be a surprise to anybody who's paid attention to the news. A lot of the enforcement and consumer protection agencies that consumers depend on to protect us from these scams and go after the bad actors are not getting the funding or the resources they need to do their jobs. And so I'm talking in particular about agencies like the Consumer Financial Protection Bureau and others And so we are pushing to fully fund those enforcement and consumer protection agencies so that people have some help on their sides, not facing this threat alone. Let's go on to the next slide. And so just to add a little bit more context here and try and add some scope to this, why scammers love these payment apps. I talked a little bit about that earlier, but number one is that the apps are widely available. There's over 151 million people who are users of Zelle. Even if you don't think that you're a user of Zelle, if you have an online bank account that you can access online, chances are you have access to Zelle. There are 92 million people who are Venmo users, 57 million users of Cash App, and these all have significant problem with fraud. They're instantaneous. From a scammer's point of view, this is great. It means that once I've sent you the money, they can almost immediately move the funds that I sent through a payment app into other accounts, turn it into cryptocurrency, put it into forms that's very difficult to recover, and makes it hard for law enforcement to track down on them. As I mentioned earlier, these payments are often irreversible. So even if I find out later that there's fraud involved because of that FDL loophole I talked about, those funds typically can't be recovered. There are efforts in places like the United Kingdom and Australia to go after that, and I think that those are good, and we're trying to get those solutions implemented here in the United States as well. And then finally, at the end of the day, we think that these apps are just insecure because it's consumers who are on the hook in the event of fraud, as opposed to the apps or the banks behind them. We think that there is a lack of incentive, financial incentive, to invest in the kind of security protections that you see on traditional credits and debit cards. If you're anything like me, the last time you found out there was fraud on your credit or debit cards, it wasn't because you checked your bank account or your statement. It was because you got a call from your bank saying, "Hey, Mr. Jones, could you just spend $150 on a plane ticket in California when I saw you just bought Starbucks in New York City 5 minutes ago?" You say, "Oh no, that wasn't me." They say, "Thank you very much." They cancel the card and they issue you a new card. And the biggest inconvenience is that you have to relink that card to your network account and other things. And that all happens because ultimately it's the banks and their merchant partners who are on the hook for fraud due to FDA. By contrast, on payment apps, it's typically the consumers who are on the hook. And so you have seen what we believe is a lack of investment in security, at least as much as there needs to be to actually address the scope of the problem. So let's move on to the next slide. And just to kind of, one of the things we always like to close with when we talk about these, and I'm sorry, I had a picture of Charlotte here, but I don't think that's coming through, is just to recognize that if you or someone you know has been a victim of a scam involving a digital payment app or any scam, is that the scammers are thriving on the fact that people often blame themselves. We hear victims talk about, sort of use terms like, "I can't believe I fell for this. How could I be so stupid?" And just to let you know that this can happen to anyone. Millions of Americans every year are victims of fraud. I'll tell you, every time I have a conversation with folks from Congress and community groups or anywhere, and I tell them that I work on fraud, everyone has a fraud story. It either happened to them or happened to someone they know. And in particular, I wanted to highlight the case of Charlotte Cowles. She's a personal finance columnist for New York Magazine. And unfortunately, she became a victim of an impersonation scam that ultimately got her under the ether, which is what I was talking about earlier, and resulted in her putting $50,000 in a shoebox and handing it to a driver who showed up at her house in a white Mercedes. And so you would think a personal finance columnist of all people would know to look out for the warning signs of this, but yet she fell victim too. And there are many, many stories about people who you think they're too smart for this. This would never happen to them. Well, it happens to them, and it can happen to you too. So the takeaway is, don't be embarrassed to be a victim of fraud. It happens to many, many people. Talk about it to people that you know, and share your story. That's the only way we can get a hold of this. And so I'll move on to the last slide, which is, there we go. I think that might have been on my end, having duplicate slides. I apologize, but that's Charlotte right there. Let's go on to the next slide. So the takeaways or ways that you can reduce your risk of being a victim. Number one, before you pay anybody using a digital payment app, make sure and double check the information for that recipient. Make sure you have the correct phone number, the right email address, the right username. If you're paying before you hit send, because like I said, once you hit send, that money is gone, and it's very difficult, if not impossible, to get that money back. Beware of urgency. I talked about this a little bit earlier, but scammers, their MO is to get you to act before you think. They try to make you scared. They may try to make you think something terrible can happen if you don't act right now, or you're going to lose out on a great deal if you don't act right now. The point is they're trying to get you to act before you think. Tell a friend is the third tip. Even you listen to that little voice in the back of your head. If it sounds, fishy, you're not quite sure, ask somebody who's not talking to the scammer, because these scammers are professionals. They want to try to isolate you and have you only talking to them so that they can get paid. When you ask a friend or a coworker for advice, you're likely to get help in resisting this fraud. Number four, make sure and turn on your app security. Most of these payment apps offer some form of multi-factor authentication or PIN, so that if somebody gets a hold of your phone, they can't just start sending money through your payment app. And then finally, if you have been a victim of this, recognize that anybody can be a victim. And the important thing to do to get help is to report it quickly. So you can report it to your bank, the app provider, and to law enforcement. And you can also file a complaint at my organization, fraud.org. We share those complaints with the network of law enforcement and consumer protection agency partners. So I believe that's my final slide. But to move on, I think I just have my contact information there. Yep, there it is. So please feel free to reach out if you have any additional questions. And thanks again to Consumer Action for allowing me to talk about this today.
So hi all, I'm Stephanie Landry. I'm with Consumer Reports. First, really want to say thank you to Nelson and Consumer Action for the opportunity to talk about this work, to John and Vikram for sharing their expertise, and then also to all of you for taking some time out of your busy schedules to come and talk about payment apps today. So I'm with Consumer Reports. It's an independent nonprofit member organization that works to create a fair and just marketplace for all. We work to empower and inform consumers, to incentivize corporations to act responsibly, and to help policymakers prioritize the rights and interests of consumers in order to shape a truly consumer-driven marketplace. On the next slide, or maybe in 2 slides, what you'll see is our vision for a fair digitized financial system, which is one of the areas in which we work. On the next slide is that vision. We also work in areas like product safety and sustainability. I'm sure some folks on the call are familiar with the Consumer Reports magazine and CRO and our evaluations of things like cars and refrigerators. And what my work is to bring that to digital finance. And so we are hoping to build a fair digital economy where digitized financial products let consumers spend, save, borrow, and invest safely in ways that respect their privacy and data, provide the benefits they expect, protect them from discriminatory and predatory practices, all while achieving positive outcomes. And so one of the ways that we do that, on the next slide, I'm going to talk a little bit about our Fair Digital Finance Framework. This is a framework that we have developed to really unpack apps and look at how they're performing across a variety of principles, including the 6 that you can see on the screen. So we look at the safety of the app. So that could include things like how the funds that the app might hold are protected. It looks at security practices like authentication, encryption, protection from software vulnerabilities, and how the app cares for data. We also look at privacy. We look at things like data minimization, user data rights, and how meaningful the company makes privacy information to consumers. We also look at transparency, and this is things like clear disclosure of pricing, clear disclosure of terms and conditions, and how good are these disclosures. We also look at what we call user centricity, and this is all about the app, the product, the experience being built with the user in mind. So are users able to get products that are appropriate for their financial lives and their financial needs? Are there fair terms and practices? Are the interfaces intuitive? How's the customer service and the grievance and redressal mechanism that the product provides? Up next is support for financial well-being. And so that looks at what the company says about their commitment to their users' financial well-being, but then it also looks at what are the design and features that are specifically built into the app or the structure of the product that helps support a user's financial well-being. And so that, of course, includes things like pricing and interest rates and all of that. And then the last principle that we look at is inclusivity. And so this is how the app, the product, the company minimizes barriers to access and use, and looks at things like bias and discrimination and how the company seeks to minimize those as well. So that's the framework and what we're looking at for apps and products to provide to folks. The way that we evaluate this is through three kind of primary methodologies. The first is consumer research. So we do quantitative consumer research through nationally representative probability-based surveys of general population and also specifically of users. We do qualitative consumer research through things like focus groups, online discussion boards. And then we also do UX testing of the product itself, trying out the app, seeing how it's working, talking to users, seeing how they're liking the experience. The next big sort of bucket is product testing. Here we do documentation review. And so this is looking at both things like legally binding documentation, like privacy policies and terms and conditions, but then also really everything else that the company says about this product or service. So help centers and FAQs, those other consumer facing materials that might be a little bit more friendly and accessible than privacy policies and terms and conditions. We also do user interface review. So that's our expert testers using the app from the kind of seat of a user, looking for different features, looking for different settings, seeing how easy it is to use the app. And then we also do technical tests. And so this is like network traffic analysis. It's really breaking apart the app, kind of looking behind the curtain. And then last up, a big piece of this work is corporate engagement. We really want to work with these companies, bring what we find to them, and talk through what could be better. What are some of our recommendations for things that they could change about the product to make it better for consumers? So that's a bit about like what our work is and how we do it. And so now to the actual topic at hand today of digital wallets or payment apps. So if you advance 2 slides, I want to talk a little bit about some survey results we have. We wanted to really unpack digital wallets because it's a very popular and widely used app. And of course, there are, as John covered, there are some known risks of using these products. So in 2 slides, if we advance 2, there are some survey results where 59% of Americans use a digital wallet at least once a month. We also asked what users want to see in their digital wallet, what would make them more likely to use that product. And so some of the things that folks shared with us was that they're looking for fraud protection services, such as liability protection for scams. They're also looking for easy to use interfaces. They're looking for ways to control how their data is used and shared. They're looking for insurance that protects their money in the event of a failure. And they're also looking for an ad-free experience. So a lot of these things should sound really familiar because John talked about these as some of the benefits and some of the risks of what folks experience in a digital wallet. So if we go to the next slide, and then a couple more, one more. There we go. We also asked about folks' usage of digital wallets, and sort of no surprise here of how folks are using them. The top 3 ways that people use their digital wallets are to make purchases at online merchants, to send payments to friends and family, or to make purchases in person at physical stores. We asked users what they liked about it. They like the convenience for purchases, they like the faster checkout process, and they like being able to send payments to friends and family or splitting bills without that sort of having to get cash or write a check. Some of the dislikes are those security concerns. Folks are concerned that their payment information could be vulnerable to hacking or data breaches. Users are also concerned about privacy, that the company could share or sell their personal data or transaction history. And they're also worried that the digital wallet might not be accepted everywhere that they want to shop. So folks really want that sort of convenience of being able to use these. And then on the next slide, last couple of survey results of folks, we also wanted to drill down specifically to that P2P service, those peer-to-peer transactions. And while we found that 72% of folks haven't had any issues when using P2P services, lots of folks have. And so that could be sending money to the wrong person by mistake. If you transpose a digit in like a phone number when you're sending it, it could go to the wrong person. Or there's a lot of folks who have really unfortunately been the victim of scams, and they've sent money to folks who turned out to be fraudsters. People have also sent money to folks that were never received, or didn't receive money that people said they sent to that person. Or folks have also received money from someone that they didn't know, not a scam, but like that somebody mistakenly sent money to them through the app. And so with all these survey results, we really wanted to kind of turn what folks were experiencing, what they were concerned about, what issues they were experiencing, and then dig into digital wallets through our expert evaluations. So the next slide shows just kind of the approach that we took. So still a bit like on the methodology side here. The scope of the evaluation looked across all 6 of those principles within the Fair Digital Finance Framework. We employed all those methods that I already talked about: product testing, consumer research, and corporate engagement. And then we looked across 6 different payment apps. So Apple Wallet with Apple Cash, which is its separately branded P2P service, Google Wallet, Samsung Wallet, and Samsung Pay Cash, which is their P2P feature, and Cash App, PayPal, and Venmo. So those are the 6 products that we looked at. On the next slide, there's a table that shows kind of more specifically what we did look at and what we didn't look at. These products meet sort of a similar consumer need, but they do it in slightly different ways and have slightly different configurations of services and features that they offered. So what we specifically evaluated was the mobile app and mobile experience, the ability to make point of sale payments, online payments, P2P transfers, and having a stored balance feature. With the exception of Google, they previously had a P2P feature, and they sunsetted that feature in the midst of our testing. We still included Google, although now it seems like a bit of an outlier in this group of 6, just because like Google Wallet and Google Pay, very widely used product. So we're still able to dig into the mobile app, the point of sale payment, and the online payment for Google. Some of the things that we didn't look at were some of the other financial features or services that these apps offer. Many of them are expanding into having debit cards or credit cards, or the ability to buy or sell cryptocurrency. Those are not features that we evaluated. We also didn't look at how some of these apps allow folks to store things like plane tickets or concert tickets or IDs or keys. That is not something that we evaluated in this go round. So on the next slide, you can see a whole bunch of chevrons. So what this is sort of the overall scores from the evaluation, just to get sort of a kind of like a visual snapshot. And so what you can see is that generally speaking, these apps are like, they're doing pretty good from a user experience perspective. They do, of course, have their issues, have areas for improvement, and have like real risks and harms that users should be aware of as they're going about using these products. But broadly speaking, they are convenient. Users really like them. They have good technical security measures. And it's just really important to know the risks as users use this like really convenient product that's kind of hard to not use at this point. So then on the next slide, I'm going to get into some of our findings. We had a lot of findings because there's a lot of really interesting things that are going on with these apps and products. I'm going to voice over some of these, and then if there are any that I don't talk about that people want to hear more about, definitely like feel free to ask me, reach out to me afterwards, or dive into the white paper, which is a very long report that goes into a lot of detail about all of these. But I'll highlight some. And again, you'll hear a lot of overlap between what John shared and what I'm going to talk about. So the first one that I'll kind of dive into is that second one, that the responsibility of fraud monitoring and liability protection varies depending on the service and depending on the transaction. So with the service and the 6 apps that we looked at, there's kind of 2 different buckets. There's Apple Wallet, Google Wallet, and Samsung Wallet, which those are pass-through wallets. So when you're making a payment using your Apple Wallet, for example, what Apple is doing is passing along your payment information, so your card details. Apple isn't actually moving funds, and so that means that they have a different responsibility for those transactions under regulation. And so they are not specifically responsible for fraud monitoring and liability protection of those transactions. It's the underlying card issuer. So like if you have your Chase card stored in your Apple Wallet and that's what you're using, Chase is responsible for monitoring for fraud in that situation. And that's the real, one of the big problems here is kind of the transparency of that and how aware consumers are that if they have an issue with a transaction like that, they need to go to Chase or their bank, the card issuer. They don't go to Apple. And when we were looking through policies and consumer education materials, like it was pretty confusing. And so if a consumer is experiencing a problem, they shouldn't have to wade through a bunch of materials to figure out who they have to contact, or they also shouldn't like reach out to customer service of one institution and then be shuttled someplace else. This should be sort of easier, more streamlined, especially when somebody is experiencing a problem. The other piece of this is that it varies based on the transaction. And so this is where we get into that difference between an unauthorized transaction versus a transaction that a consumer technically authorizes because they're sending the money, but it turns out to be a scam. So that's the other difference there. And again, we would like to see that changed, but at a minimum, the sort of transparency and clarity is lacking. I'll talk a bit about insurance, finding number 3. And so here we found that the availability and applicability of FDIC insurance really varies across these products. And it's also, again, the clarity, it's kind of confusing and it's not super clear. But for many of these products, what users would like, they have to take an additional step in order for any money that they store in the product to be covered by FDIC insurance. So that could be relatively simple, like registering their account, which usually includes some form of identity verification, or it can be a little trickier or something that might not apply to all users, like using a specific feature that that app offers. And so that could be like direct deposit of a paycheck into the app. If you do that, then your funds are FDIC insured. Or if you've ever purchased cryptocurrency with that app, then any money, not the crypto money obviously, but like any money that you're storing in that app would be FDIC insured. And not all users are going to want to do all of those things. And we believe that they should still be covered by FDIC insurance. I'll talk a bit about finding four as well. This is data minimization. Most companies don't practice data minimization. These apps and products collect a lot of information about their users. John mentioned the sort of like the device information, sometimes location. They also obviously have transaction details. Some of the companies can connect this with other data that they have about the user from other products that the company offers, like Google is able to connect this with an overall Google account information. And so that's really a lot of information that the companies have about their users. And it is frequently shared with other companies, often for marketing, which we would like to see a lot less of. On the next slide, I'll talk a bit about finding nine. And so here, most companies advertise additional services within their apps. And so this is especially interesting because from our survey findings, like one of the things that people are looking for is an ad-free experience. But what they're getting is a service that does often have ads, and they're often for other financial products or other services that the company offers. The payment apps are typically very low cost or free. The other services that are advertised within that app are typically not. There are usually fees associated with those other features or services, and that is what folks are getting advertised every time they open that app to make a payment or a transfer. And then on the next slide, I'll talk a little bit about 11 and 12, which these are around financial well-being and what these apps do to support their users in managing their financial lives. So we found that the apps do the basics in supporting users to manage and track their spending. And so that's like, when you open these apps, it's pretty easy to find a list of transactions, to see your balance if you have a balance. So those sorts of basics are really like they're well built into their app. The app, it's pretty easy. But the companies don't go much past that. So we think that there's a lot of additional opportunity to design those apps and products to support users' financial well-being. And so this could be things like having some variety of like a budgeting feature or some spending indicators that maybe at the end of the month rounds up your spending, is like you spend X% on whatever category, to help users have those insights into their spending habits. So those are some of the findings from the evaluation. On the next slide, I'll get into some recommendations. So some of the recommendations when we talk to the companies, these were our recommendations, what we would hope to see in their apps and in their products and in their policies. So a big one is extending that liability protection to cover fraudulently induced transactions or scams. So even though there is that regulatory loophole, we really think providers should be stepping up and protecting their users in the event of scams. At a minimum, in the absence of that protection, we want to see increased transparency about the limits of that liability protection, because like I said, in policy, in consumer education materials, it can be really unclear to figure out what is an authorized transaction, what's an unauthorized transaction, what's not covered, what is covered. The next thing up is we really recommend that providers take another look at the language that they use to describe FDIC insurance availability and eligibility, and to test that with actual users. Because when we read that, even from like our experts kind of like had to sit with it for a minute, and it's like, what is this company actually saying here? What would we have to do to make sure funds are protected and insured? And so we really encourage companies to take another look, to test that out with users so that it is crystal clear when a user's funds are protected by FDIC insurance and when they are not. We'd also like to see those additional steps that users sometimes have to take. We want those to be easier and more accessible. So if users have to register their account in order for their funds to be covered by FDIC insurance, we'd like to see that part of the onboarding process just built into setting up the app for the first time. So it's like a set it and forget it, it's done. The user never has to worry about it again. And we'd also like to see if a user is required to use a specific service in order for their funds to be insured, we'd like to see a wider range of options so that they're relevant and accessible to all users, as opposed to this sort of limited set of features that maybe not all users want to take advantage of. We also have a lot of recommendations around privacy. We'd like to see more in-app settings for users to control their privacy and to exercise their data rights. So in some cases, these settings don't exist, and users just don't have a choice to opt out of some of the data sharing and collection that's happening. And in other cases, folks can get to those settings, but they're sent outside the app to do that. So for example, for Apple Wallet, those settings are not available in app. You have to go to the phone settings and then the privacy settings and then to the app and see what's available for the app. We would prefer to see that in the app across all of these products, just because we think it's easier for users to find, and when they're using the app, like that's when that's going to be top of mind, as opposed to what feels like some barriers and hurdles that folks have to go through in order to control their privacy and to manage their data. And then the last sort of big recommendation we had for providers was around financial well-being, and that we think there's a big opportunity for apps to really step up and help their users in managing their finances. And so some of the things we talked about were smart alert systems, spending insights, like the example I gave on the last slide, and tools for saving and financial planning. So those were our recommendations for providers. On the next slide, we have some recommendations for regulators and lawmakers. Again, this will sound very similar to some of John's remarks. So we'd like to see EFTA updated to create protections for induced fraud, to close that scam loophole. We'd like to consider a shared liability approach. There's an example from the UK where the liability is shared between the bank that sends the money and the bank that receives the money, or the financial institution, so that it is on both sides of that transaction, to just get more sort of like skin in the game, and for the institutions to take more responsibility on both sides of that fraudulent transaction. We'd also like to see stricter oversight and supervision of payment apps by regulators. In particular, this applies to the tech companies, because they're pass-through wallets. The way that the oversight is different. The CFPB did have some action around this, but unfortunately got rolled back by Congress. We think it's really important for this stricter oversight and supervision to happen. And then we'd also like to see more consistent standards for fraud reporting, fraud investigations, and reimbursement. And so some of this also touches on that sort of information sharing at different steps in the sort of fraud process that John was referring to earlier. And then last up is like for users. So we really think the responsibility and the onus should be on providers and regulators and lawmakers to ensure that products are safe for users and like helpful for users. But in the absence of that, and knowing that these products are everywhere and they're super convenient, we also want to provide some tips for users so that they can use these safely. So some of the things that we recommend is that folks turn on transaction alerts, so that every time like something happens in your Venmo, you either get a notification or an email or text or whatever it is. Go into the app, see what your alert settings are, what the options are for you, and turn them on. We also recommend that folks check balances weekly. This is like, you know, balancing your checkbook on a monthly basis, which I'm not sure that anybody does anymore, but it's really important to keep an eye on those transactions so that folks know exactly what's coming in and out, and so that you can notice if there is any fraud, you can be right on top of that, know what's happening, reach out to the provider and get it taken care of. We also recommend some security features that folks should turn on. And so this is app level authentication for each purchase. Some of the apps have this defaulted, some do not. And so for the ones that do not, we recommend that users go in and turn on the setting that would require you to enter your PIN or do your biometric, whatever it is, so that each time a purchase is made, you are authenticating it in some way. We also recommend that folks lock their wallet. Again, some of the apps require you to sign in each time, some do not. We really recommend that folks turn that on so that each time you open the app, you have to authenticate as well. This is the sort of like if somebody gets your phone and they get into your phone, there's still another barrier that they can't then just open Venmo and like transfer all your money out of it. On the privacy front, we recommend that users do what they can to opt out of data sharing and usage. We recognize that these options are limited, which is really unfortunate, but users should be looking at what privacy settings are available to them and doing whatever they can. A concrete example of this is Venmo has that social feed where everybody's transactions are. And that defaults to public when you set up a Venmo account, but you can change that in your privacy settings. So we really recommend that users do that across all of their payment apps and digital wallets to see what settings are available to them and to limit their data sharing and usage whenever possible. We also recommend that folks move the funds into the linked bank account as soon as possible. We really don't recommend that folks leave balances sitting in their payment app, but rather transfer it back to whatever the underlying account or underlying card is. And this is really to make sure that those funds are covered by FDIC or NCUA insurance. We do, though, recognize that sometimes this just doesn't work for the way that people manage their financial lives, but when possible, we recommend that users move funds out of the payment app. If users do have to keep funds in the payment app, we recommend definitely registering the account or doing whatever it is that needs to be done, figuring that out, and then doing it in order to be covered by FDIC insurance. And I have linked on the screen here to our Consumer Reports Online article that talks about the evaluation and talks about these tips in more detail and other tips as well. I am fairly certain that this article is in front of the paywall, so you could share this with any of your clients or talk about it with them if these issues come up. And on the next slide, just want to say thank you. Really appreciate everybody's time today. My email is there. If you have any questions, definitely feel free to reach out. And just to give everybody a taste of what's up next for our research is we're currently looking into remittance apps, so international money transfer apps. We'll be looking to buy now, pay later products, cryptocurrency exchanges, and banking products over the next 12 months. So that is what's coming up for Consumer Reports as well. But thank you all so much. Nelson, we can skip over this and hand it to Vikram.
Thank you, Stephanie. That was a very informative presentation, and I want to first thank Consumer Action for inviting me back and putting together what's been a very great panel so far. And I'm always happy to work with them and continue this vital mission that the FTC has of educating consumer and consumer groups about the various vectors of fraud. And I hope to explore a little bit more of that today as it concerns payment apps and building upon the very important topics that John and Stephanie covered. So we can go ahead and dive in. I know we're short on time, so I'll go ahead and start. I'll start by first saying that the views I present here, I mean, the usual caveats are my own personal views, are not the official adopted views of the agency, but I hope to bring the insights I have through my 5+ years at the FTC, plus several more working international, criminal fraud investigations to bear here. So let's talk about the various types of payment scams in a minute. But first, I'm going to go over what the FTC does. I mean, I know that a lot of folks are familiar, very much so, with our antitrust side of the house. I'm sure you can read from the headlines any number of news stories about our merger investigations and enforcement actions. But an equal and vital part of our statutory mandate is protecting consumers. So we have a very robust Bureau of Consumer Protection whose primary mission is to investigate and pursue through litigation scams and scam artists of various types. Our statutory mandate is exceptionally broad, and we cover pretty much every aspect of scams you can think of. There's some narrow exceptions for banking and transportation. We pretty much do it all, and that's a mission we take very seriously and our management takes very seriously. So a lot of what we do is investigating and pursuing and building cases against organized, very large-scale rings of scammers. We can't pursue, unfortunately, every scammer for reasons that other panelists alluded to, namely resource challenges. And we have to focus our efforts, because of those challenges, on the largest of actors and the most organized of actors within our reach. And that often means that we can't pursue some of the bigger rings that are located overseas in countries like in Southeast Asia and elsewhere that are responsible for a large amount of the fraud. But we make pretty effective use of the tools that we have to bear. And, while we're not always successful, we have returned billions of dollars to consumers routinely pursuing these kinds of cases. An equally vital part of our work is what we're doing essentially right here, consumer and business education and outreach. And we take that mission very seriously. I think the most effective way to prevent scams are to really empower consumers and business organizations to spot fraudulent behavior early and stop it in its tracks, because you can't shut down every last operation. You can't seize every last fraudulent dollar, but you can always make the consumer their own best advocate so they can spot scams early and prevent their money from falling into the wrong hands. We also make it our mission and our business to have very close strategic partnerships with organizations involved in consumer protection. Certainly Consumer Action is one of them. And we also partner with various state and local groups, nonprofits. We work very closely with the AARP and also the Better Business Bureau on monitoring and educating folks about the various realms of scams around it. You can go to the next slide. So what I'm going to do today is really talk about some of the major payment scams. I'm going to spend most of my time on that. I know John and Stephanie covered the various types of payment apps that are out there, so I'm not going to belabor that, but I'll talk very briefly about it for some context. Then we'll dive into some of the types of scams that we're seeing, and finally, I'll go over some recommendations about what to do if all the preventative measures have failed and you actually have sent money to a scammer or a loved one has sent money to a scammer, and the question is what to do now. Go to the next one. So we talked about the various kinds of payment apps. There's Venmo, there's PayPal, Zelle, although not its separate app on its own, is linked and integrated with online banking platforms for many existing banks. And Cash App has also gained in popularity recently. These are some examples of the apps that are out there. There are smaller startup apps that are out there trying to make a name for themselves. And I know Stephanie talked about some of the other digital payment, wallet systems out there. So this is the landscape of what we're dealing with. And I can certainly say from my own experience that we're seeing a lot of fraud vectors come through these apps, consumers complaining to us and to state attorneys general offices about, organized rings texting them, asking them to make PayPal payments, Venmo payments, Zelle payments, etc. And the key is okay, so we know these apps are out there. What do we do about them? Next slide. So those same features about these apps that make it attractive to consumers also make them attractive to scammers. Scammers know that they're convenient, they're safe in some ways for user friendliness, and consumers like them for that reason. And because of that, scammers will often see folks using those apps as a little more vulnerable to their charms, and to convince them to send and depart with money on those apps. Now, certainly, like, the figures in terms of the use of these apps have been talked about. I know Stephanie talked about that. They're widely in use. I mean, there's nothing wrong per se with using them. I mean, I personally use some of these apps myself, and I know many of my colleagues do as well. But at the same time, I mean, you have to take any kind of convenience with a grain of salt. I mean, like any type of system, it is vulnerable to fraud. Now, in terms of the differences, I know some of the other panelists talked about use of credit cards, and how you have fraud protection on your credit card. It isn't necessarily the case with some of these peer-to-peer payment apps. Once the money is gone, it's very, very difficult to recover it. And I think that one thing I can bring to bear from my criminal experience is that a lot of times you will see, within a matter of minutes, once the money departs into a payment app to the scammer will send that money to another digital payment platform or another bank account or sometimes a crypto account within a matter of minutes, and then it becomes impossible to trace. And through my many years in enforcement actions, I can say that it takes a significant amount of time sometimes to reconstruct and trace the proceeds of fraud, and scammers are counting on that, and they know law enforcement and government is always 5 to 10 steps behind the 8 ball compared to the scammers. So they take advantage of that, and then by the time the government gets wind of the operation, then it oftentimes is too late. That's not to say, however, that all hope is lost. Go to the next slide, please. So, as I mentioned before in the beginning, the most effective way to stop scams on this track is to be an empowered consumer. And how do you do that? It's really to use these payment apps wisely. So, oftentimes I tell consumers when I speak to them, whether they've been victims of a fraud or not, is whether they want to know what to do about money they've lost, or whether they want to know what tools to use to prevent themselves from being scammed. I say, just use your common sense and listen to your gut. That is often the best course of advice. It is often more right than you think it is. And cardinal in that is, don't send money to people you don't know. There's certainly a temptation to do that. Like, they'll use all sorts of methods of persuasion to try and convince people to part with their money. But if you don't know them, then just don't bother. Don't bother doing that at all. And I think the easiest way to spot something like that is to prevent people from sending money to strangers. Just don't. If you don't know them, then don't send the money. I think the next thing to do is, if you know the sender, oftentimes verify with them if they're actually requesting money on that platform, because sometimes it could be an AI impersonation, or it could be someone else kind of whose account has been hacked or stolen asking you for that money, in which case you definitely shouldn't send the money. And oftentimes, looking a little closely at the way they're contacting you is useful for that. So scrutinizing the contact information, using two-factor authentication, all of that is of vital importance to prevent this, from being a victim of a scam in the first place. I know that John talked about being skeptical of urgent requests. So they're counting on urgency, these scammers, to make sure that individuals part with their money quickly, and they'll disguise that in many forms. So they'll say, we'll shut off your utility account, or we'll report you to some enforcement authority, whether it's an IRS scam, or they'll say they'll get you in some sort of enforcement trouble if you don't part with your money immediately. But again, if your gut suggests that the urgency is not warranted, it probably isn't. Next slide, please. Apologies, Nelson. I think I'm having a technical issue. Give me 1 second. can't see. There we go. Let's back up. So I know I talked about the various ways of using these apps wisely, being able to empower consumers, but let's talk about some of the actual scams themselves. So the first and foremost that I want to talk about is imposter scams. That is by far as the data we've seen, the biggest bucket of scams where people have been, subjected to losing their money. And I think that some of the key vectors we see are government enforcement impersonation. So like I said before, they'll impersonate the IRS, they'll impersonate other tax collection authority, sometimes Medicare. They'll say that they're from Medicare, but the other times we'll see them impersonate businesses. So one of the more unique vectors of scams we see in the payment app world is we'll see scammers impersonating PayPal and Venmo themselves. And the way that typically kind of comes across is they'll send the victim a text message and they'll say, your account balance is running low, or you've received a payment, and to enable that, you're going to have to click this link and then submit your contact information and your account information to verify it. And of course, once the user clicks on that and they submit all that information, then the scammers get access to their account, and then they get to make all sorts of money transfers to their own accounts, and the money is gone. So that's one particularly dangerous avenue we're seeing. And another is they actually will impersonate enforcement agencies trying to get money back to consumers, which is particularly troublesome because the FTC itself has provided consumer redress for victims of fraud, sometimes through PayPal payments. So if you look at our press releases on our website, you'll see examples of cases where we have seized money from scammers, we've gotten a favorable judgment, and the redress to those consumers is given through PayPal payments. So knowing this, scammers will sometimes say, well, you're the member of the class that's part of this redress settlement for the FTC, and of course, click this link to enable your PayPal credentials to be used, and then of course, like with the other vectors, the consumer's payment information is then taken, and then their money is gone. So imposter scams are possibly the biggest thing to watch out for. I think, I can't tell you how many times I get text messages in a day from people claiming to be the IRS. Easy Pass, the toll authority here in the Northeast, is another big one. They'll say, you're got past due toll violation notices, and if you don't, provide payment immediately, then they're going to report you to the DMV or take some other serious adverse action. And of course, the way they want payment is sometimes through PayPal, Venmo, Zelle, or sometimes Bitcoin. They'll ask for Bitcoin, and that's like a dead giveaway that what they're actually doing is fraudulent. And one common piece of advice about imposter scams I tell people to look out for is government enforcement agencies typically will not reach out to you via text message, social media, or any kind of peer-to-peer app directly. So if you're getting a request from someone claiming to be part of a government agency through those avenues, chances are it's probably not a government agency. Government agencies, for the most part, tend to be a little more old school in their communication style. So they'll be much more will prefer sending you a bill in the mail or something pretty old-fashioned if there actually is something at issue here. I mean, if the IRS, if you have back taxes with the IRS, they will send you a notice in the mail, and you have certain statutory rights. If you have an issue with toll enforcement in most states, they will send you a toll violation notice in the mail. So if there's a high-tech avenue in which government is approaching you, chances are it's probably not the government. So imposter scams are a really big deal, and I think they make for a lot of focus of a lot of the work we do here at the FTC. Cash flipping scams are a little older, but they're still very popular, and I think this is one where common sense is your best avenue. If someone says to you, send me $200 by Venmo and I'll turn to $1,000, if your spidey senses should go up and say, well, and it's probably not true, like what investment in the world would grow that quickly under normal circumstances? Chances are none, because there is none. And that goes for pretty much any kind of app you'll see that kind of scam on, whether it's Venmo, PayPal, doesn't matter. If someone's offering you an investment opportunity, they're probably and claiming that kind of a return or a guaranteed return, then chances are that it's pretty fraudulent. The last one I'll talk about here on this slide is fake item sales. And we have a statute here at the FTC called the Restore Online Shoppers Confidence Act that speaks to a lot of these types of scams, where oftentimes these scammers will ask consumers to pay for a product or service through a payment app like Venmo, PayPal, Zelle, etc. And the item will never arrive, or if it does arrive, it will arrive late, too late for the item or service to be used. And as a result, the consumer is left holding the bag. So oftentimes you'll see the scammer ask for immediate payment, and then the consumer will ask, where's my item, and they'll be given any number of excuses saying that, oh, it's stuck in shipment, or it's in a warehouse, it will be on its way, and eventually, of course, the item never arrives. So fake item sales, I think, behind cash flipping and imposter scams, round out some of the top three that we see. Next slide. Now, these last two, I think you might be a little more familiar with. The software glitch scam is, pretty ubiquitous. It's been around for a couple of years. And of course, they say that there's something wrong with your computer or something wrong with your app and you need to download a new version and log in again. And of course, once you do that, then they take your payment information, and then your account is compromised, and you'll have a very difficult time recovering the funds if you have the ability at all. So it's still around. You see it like less common than some of the other ones I already talked about, but it is certainly something I spend a lot of time educating consumers on over the phone. And the last one's been getting a lot of attention in the press lately, romance scams. There was a great article in the New York Times a couple of months ago about someone who thought she was in a relationship with someone fairly seriously, only to lose tens or thousands of dollars due to fraud after the person she thought she was dating had asked her to send him money on Bitcoin to later invest. And that's a notable example. But apart from that, you see this happen all the time. They build trust with the victim, and the victim then takes whatever trust that is, and relies on that and sends the scammer money, and then the scammer departs with the money immediately, and never to be found or heard from again. It preys on the vulnerability of a lot of people, and we're seeing this particular type of romance scam rake in billions of dollars annually. We don't have the 2025 data published as of yet, but once we get it published, I expect that to also be in the top 7 or 8 levels of scams. Next slide, please. Some of these we discussed in terms of the best way to prevent yourself from being scammed. Check who's sending the request. Do you know them? Do you not know them? If the answer is no, I do not, then do not send them money. Do not give your account credentials to anyone. I would say really anybody that asks. I mean, I think that if someone's pretending to be tech support for some of these apps and they're asking you for your account credentials, chances are, they probably aren't tech support. So your account credentials are intended to be private, so don't compromise them, and make sure you have two-factor authentication enabled to prevent fraudulent access. Next slide. All right, so we spent some time talking about the types of scams that are out there. Now I want to spend a couple of minutes talking about what to do if all else has failed and you've sent money to a scammer. So the various apps have their own ways of contacting support, which you should do, and that's on the screen in front of you. To the extent that that's what I would first recommend, of course, is to submit those complaints. And then once that's done, I highly recommend contacting your law enforcement authorities. And that includes the FBI, the local police if necessary, and also the FTC. So there's a resource that is not on here that I will recommend to folks called the Internet Crime Complaint Center, or IC3. And IC3.gov is the website, and that's a very convenient portal for you to report to all the various law enforcement agencies to discuss, what happened and document the incident. And if there's a method to enforce the action or, recover the funds, the law enforcement will sometimes get involved and will contact the victim of the scam directly. So the other thing I'd recommend is contacting your financial institutions. So to the extent that there is a bank or other financial institution that's linked to these various payment apps, I would contact them as well. And there's limited avenues that they can do once the money is departed through one of these apps, but it certainly does help have some heightened scrutiny on your account. So contacting your financial institutions is also highly recommended. Next slide, please. And I talked about reporting fraud to the FTC. So I think that, the easiest way to do that is through our website. We have a phone number for foreign languages below, but if it's an English language report or a Spanish language report, you can do that electronically. It's very simple. The addresses are on your screen. It's reportfraud.ftc.gov in English and reportefraud.ftc.gov in Spanish. I can assure you that FTC attorneys and investigators routinely look at these reports. We scrutinize them for trends, and we often develop cases based on the reports that we do get. And a lot of times those reports go into a database called Consumer Sentinel, which other agencies can contribute as well, including state attorneys general. And we collate all those reports to see, okay, well, what are we seeing? What's some commonality? And we've built many cases very successfully just through those reports alone. So we highly encourage everyone to report that as soon as they are aware of themselves being a victim of fraud or of a loved one being a victim of a fraud. Next. So another most effective way of preventing scams, particularly with payment app scams, is to look at some of our materials. We have a lot of great printed materials and electronic materials available to educate consumers and consumer groups. So we call it Pass It On. It's Pásalo in Spanish. And you can go see examples of those reports at the URLs you see on your screen. And I highly recommend, if you're a consumer group listening to this and you have work that you do on your own with consumer victims or consumers directly, to bulk order these materials so you can distribute them. They really are very handy. And they go over a lot of the very common sense tips and tricks that I just discussed today, as well as other ways to spot and avoid scams. Next. And the other service I encourage folks to look at is to sign up for alerts about the various types of scams or enforcement actions. You can do that at consumer.gov. And it's always helps to stay ahead of the curve and look at the trends that are going on and to be educated and aware. Next, please. And the URLs for signing up for those consumer alerts I just mentioned are below. We have English and Spanish consumer alerts. And this is vitally important because we do see a lot more scams targeting immigrant communities. And I think that the Spanish language reports are becoming more and more useful, and we're getting a lot of great feedback about that. So to the extent that you work with consumer groups that need Spanish language resources, I highly encourage you to look at that. Next. And that's all I had in terms of the content. I'm happy, of course, to answer any questions that you may have, to the extent there's time left for that. I want to again thank Nelson and the wonderful folks at Consumer Action, along with John and Stephanie, for putting on a very informative panel this afternoon, and going over a lot of very useful information. And this is all we're all in this together. So everybody, I hope should take away something from each one of these speakers to kind of take back to your teams and internalize lessons as we work to prevent fraud of all kinds on these payment apps.
Thank you so much, Vikram. Are you able to hear me?
Yeah.
Yeah, I fortunately had audio problems the whole time, but I was able to hear everything. So Stephanie, John, Vikram, wasn't trying to ignore you. So glad you were here to present this, and I'm going to turn it over to Linda for a few questions before we wrap up.
Great, Nelson, thank you. Audience, please join me in thanking our fabulous guest speakers for their excellent presentations. And now, audience, it's your time to participate with your question. Question number one. As payment apps increasingly replace cash and pose challenges for low-income consumers, especially those who are on bank and rely on cash for their daily transactions, what can be done to ensure that these consumers are not financially excluded? Anyone can answer.
Well, this is John. I'll chime in. You know, I think this is a really great question because, as you do point out, these digital payment apps are particularly popular among folks of low to moderate income. These, not coincidentally, are the same populations that are often targeted by predatory and high-cost financial products like buy now, pay later, payday loans, check cashing outfits. Which is a big reason why I think these apps have become so popular among these in those communities. So I think that, you know, the way that we can make sure that those communities don't get left behind as these apps continue to permeate the market is make them as safe and secure and protected as possible. I don't think that only people who have sort of the great credit scores and thus have access to credit cards or sort of more traditional bank accounts should be the ones that get access to the kinds of consumer protections from the Electronic Funds Transfer Act and other FDIC insurance and things that Stephanie and Vikram and I talked about. These are all consumer protections that you should get regardless of your income level. And I think going after some of the policy challenges that we talked about on EFTA, the fraud loopholes, creating incentives to make sure that security gets the investments that they need, better information sharing to fight back on scams on these platforms is a great way to ensure that those communities aren't left behind.
Great, thank you, John. The second question, can you point us to where we can find information on the Act, which protects consumers from financial loss when a debit card is stolen or when a person is a victim of identity theft? And part two, does the FDIC protect funds held in a payment app?
Stephanie, do you want to take the FDIC question? I think you covered it.
Yeah, I can take the second part on FDIC insurance. So FDIC insurance can apply to money held in a payment app, but usually there's an additional step that the users have to take, like registering their account or using another feature that the company offers. But it is important to be clear that FDIC insurance protects in the event of a bank failure. So it's the failure of the institution that's holding the funds. So the financial institution partner of, say, Cash App or Venmo, like that financial institution where they're actually holding the money. It's a little murkier what would happen if, like, PayPal went bankrupt.
I think one of the other questions was geared towards where can I find the statute that protects us, and I think the statute referred to as the Electronic Funds Transfer Act, and I think there's a lot of useful guides on the internet. If you just Google Electronic Funds Transfer Act, account protections, there's some useful explainers you can find in open source on the internet that would tell you exactly what protections are offered.
Great, thank you. I have a question about cryptocurrency, and the question is there a way to get cryptocurrency vendors like Trust Wallet to up their protection for victims of crypto scams? This
I
is
mean, I can tackle part of that. Again, like to the extent I can't really speak for the fraud prevention departments at the various crypto firms and crypto wallets, but I will say that just for my own engagement with some of these providers at other panels like this, or I know that it's something that they're trying to ramp up in terms of having a fraud prevention department. And again, like different companies are at different stages of doing this. So I mean, I certainly can say that it's not programmatically anywhere near it should be, but it is something that's getting a little more traction.
Yeah, and I'll just build on that. You look at the data that organizations like FTC are putting out through their Consumer Sentinel network, and some of the trends we're seeing is that cryptocurrency is really becoming the next frontier in terms of how scammers are moving money. When I started doing this work, we talked about how scammers were getting consumers to pay them via Western Union and MoneyGram, and then it became sort of these reloadable prepaid cards. Now it's these digital payment apps. But the crypto is really, I think, the next big thing here. The crypto investment scams are by far among the most expensive types of scams for the victims of them. And we see that increasingly in the data it's coming out there. And the crypto industry has a large role to play in this. The nature of crypto is in many ways a perfect payment mechanism for fraud. Just like with payment apps, the payments are often instantaneous and irreversible and often untraceable. And so the different crypto marketplaces, crypto trading platforms out there really need to do more to step up and protect their users from this fraud, and to work with law enforcement to put bad actors behind bars. And until that happens, I think that crypto is going to continue to have sort of this albatross around their neck of being associated with fraudulent transactions. Unfortunately, what we're seeing in Washington right now is the momentum seems to be towards less regulation and less protections when it comes to crypto rather than more. And that's unfortunate. And I think groups like NCL are trying to halt that. I will point out, and also one last thing on this, that another big vector on this in the crypto space are these so-called cryptocurrency kiosks. You may have seen them in bodegas or smoke shops or mini grocery stores, where consumers can actually turn cash into cryptocurrency. And those are becoming a major vector for fraud, the crypto investment scam, but also many other kinds of schemes, romance scams, and things like that. So I know NCL, groups like AARP and others are working hard to try and get laws put on the books at the state and federal level to try and crack down on these crypto ATMs so that fraudsters can't use them to steal people's money.
Great. One last question, because I know we're out of time. Consumers are often encouraged to, when they are scammed, to file complaints with the FTC. But when consumers file their complaints about scam or fraud, are they contacted or informed when the FTC seek redress for those scams?
I can speak to that. So certainly we get reports of fraud all the time through the Consumer Sentinel portal and other places I mentioned, referrals. And to the extent that there's no guarantee that you're going to be called. I mean, if it's certainly a matter where we're devoting investigative resources, there is a likelihood that we're going to call you, certainly to get your story if it's you're potentially part of the redress class of consumers. And if we're successful in bringing an enforcement action and we recover judgment and have funds to distribute for redress, then certainly we have very organized methods of reaching out to individuals who are affected by it. And we have a pretty well-oiled machine. And can I guarantee that we get everybody? No, but once a redress class has been established, there's a pretty great track record of us trying to track them down and at least issuing notice, giving folks avenues to sign up for the redress and to recover any kind of funds that may have been available for that redress.
Great. Thank you for hanging in there and answering the questions. Nelson, I'm going to turn it back over to you because I know we're kind of running out of time.
Yeah, can you hear me okay?
Yes, fine.
Thank you so much, Stephanie, John, Vikram. This was a great presentation. Sorry, it was a little bit quiet during the event. The audio was not very good for me. Just want to wrap up with a couple of things. We are a national nonprofit, like I mentioned at the beginning. So please, if you are moved to make a donation, here's the information. We will email you this slide deck and you'll have this. Also, without spending a cent, you can support us by subscribing to our YouTube channel and following us on social media. And also, not everything we do is webinars. We do starting to do more and more in-person events. Some of you have been to them recently. If you are in the Los Angeles area, we are having a Just Say No to Scams Train the Trainer on September 25. So look for that, or go right to our homepage and click on upcoming events. You'll find the Los Angeles event. We're going to do a deep dive on scams, and also going to have a speaker who's going to talk to us about how do we talk to people who are in the middle of a scam, who maybe don't believe it's a scam, and others who maybe have lost a lot of money to these scams. So this is going to be in person. Please check it out. Thank you again, panelists, for being on. Thank you, Linda, Ricardo, for being on and helping us out today. Good day to the rest of you. See you next time.